Exercise 1215. It's about issuing stock. As you can see, there's a company that has 3 transactions, all related to stock issuances. I should say stock issues. The first one is occurring in May 19th. Second one is June 3rd and then June 11th. Now notice the first one here. Suzy Systems is issuing 2,000 shares of $1 par common stock for cash at a price of $9.50 per share. So let's talk about that one first. What is the journal entry for that transaction? Notice that we simply have cash received, so we have a debit of $19,000. How do we come up with that number? I always would ask you to do something like this so you can actually keep track of whether you have the right number or not. I would say always multiply for the proceeds from the stock issue the number of shares. I'm abbreviating number of shares, which in this case will be 2,000 times price per share. In this case, it will be $9.50. So 2,000 times $9.50 would give you exactly the $19,000 here. The stock account, in this case, we're using common stock, which there are 2 types, as we know already, preferred and common. For common stock, the stock account itself carries the par value. So it will be the same thing as before, a number of shares that we have right now issued, which is again 2,000 times par. As we know, we have 2,000 shares times $1 par value right there, multiply both, and that's how you get to the credit to the equity account common stock of $2,000. And then what I refer to as the excess account, in this, the actual name is paid in capital, in excess of par, would reflect number of shares issued, again 2,000 times the difference between price and par. So we take 950 minus 1, 950 minus 1, that will give us 850 times the 2,000 shares, and that results in a credit to the paid in capital in excess of par account of $17,000.